My top 4 dividend stocks in the real estate sector. Let's begin. So starting things off, we got STOR Capital, and STOR Capital is a REIT that focuses on single tenant net leases. Now, that's basically just saying that STOR Capital rents out a property to a business, and then that business, which would be the tenant, is responsible for paying the rent to STOR Capital, as well as the operational expenses of that property. And that includes property taxes, insurance, maintenance, etc. Now, when it comes to STOR Capital's portfolio, their portfolio is basically divided into 3 different industries in which they do business with, and more than half of their portfolio, or 65%, comes from businesses that are in the service industry. Now, this includes restaurants, health clubs, movie theaters, and other service-based businesses. And again, this accounts for more than half of their portfolio. Now, the other half is comprised of retail and manufacturing, both at about 17 to 18%. And this includes furniture stores, hunting and fishing stores, dealerships under the retail side, and then for manufacturing, different manufacturing plants and facilities. Now, I want to take a look at the top 10 customers for STOR Capital in terms of base rent. Now, looking at these top 10 customers, they are recognizable names. At least for me, I recognize Bass Pro Shops, AMC Theaters, Ashley Furniture Home Store, but these customers are not investment grade. Now, investment grade is just a fancy way of saying that the business's credit rating isn't up to par with what they consider to be investment grade. And I think a good analogy for the credit rating of a business is basically just the credit score of a person. Just like you and I, we both have a credit score. Businesses have a credit rating, and then that determines the likelihood of them paying or not paying their debts. Now, back to STOR Capital's top 10 customers. So I did try to find the credit ratings for all these 10 customers, but I wasn't able to. But I'm pretty sure that all of them, if not all of them, are non-investment grade. And that shouldn't be something that scares you away from this stock, but it should be taken into consideration that there is a little bit more risk. Now, that being said, I do think that STOR Capital does 2 things that minimizes the risk when renting out to non-investment grade tenants, and one of them being master leases. Now, their portfolio as of the second quarter of 2020, 93% of their portfolio is subject to master leases. Now, in a nutshell, a master lease is basically taking a business and having all of their stores wrapped up into one lease. For example, if you're AMC Theaters and you have, let's say, 10 theaters that you're renting out through STOR Capital doesn't need to individually do a lease per theater. Instead, they can group all 10 into one umbrella and then collect one rent payment from AMC for all those theaters. Now, that definitely minimizes the risk for STOR Capital, because in the event one theater is not able to pay their rent, it doesn't really affect them as much if the other 9 are profitable, because again, the rent is going to be coming from just one master lease, including all the stores or theaters within the umbrella. And now the second thing that STOR Capital does is that they do their due diligence. That's pretty tough to say, but they do their research when it comes to finding out the profit and loss statements for each individual store that they're renting out, regardless if it's under a master lease or not, which gives you more confidence as an investor that STOR Capital is only renting out to profitable businesses that could pay their rent. Moving on, I wanted to talk about the collection percentages for STOR Capital. Now, this graph does divide it into sectors, but I kind of just want to take a look at the whole portfolio. Now, in around April, May, during the heart of the pandemic, as you can see on this graph, their total rent collection percentage dipped under 70%, but now as things are starting to pick back up, as of July, they have hit an 85% collection rate in their rent. And I do suspect that number will only continue to go up as long as we don't have a second shutdown due to the pandemic. Now, talking dividends for STOR Capital, they have been paying and growing their dividends for 5 consecutive years, and I do believe that they announced a dividend increase this month in September to be paid out in October. So they're definitely still committed to increasing their dividends, and even through these tough times, they managed to increase their dividends this year. year. So that's definitely a good sign. And as of right now, they're actually paying $1.44 per share, giving them a yield of almost 5.5%, which is definitely higher than their 4-year dividend yield average. Now, when it comes to their earnings, I do want to point one thing out before we get into them, is that we're going to be using funds from operations for STOR Capital and for all the other REITs in this video. Now, we use funds from operations, or FFO, for REITs instead of earnings because it gives you a better representation of how the business is doing when it comes to these real estate investment trusts. But anyways, the funds from operations for STOR Capital for the next 3 quarters are down year over year, but they are expected to pick back up in the second quarter of 2021. Now, looking at the projected upcoming 4 quarters, they are projected to do $1.85 in funds from operations per share, and with their dividend payout at $1.44, that does give them a healthy payout ratio of 78%. Now, I do want to make a quick note. REITs are required to pay, I believe, 80 or 90% of their taxable income as a dividend. And if you're wondering why this number isn't 90%, well, because this isn't taxable income. This is funds from operation, which are completely different. But just so you know, the payout ratio doesn't necessarily need to be 90% because that's not taxable income. But nevertheless, a payout ratio of under 80% is in fact pretty solid. Now, when it comes to valuation, the 5-year average price to funds from operations for STOR Capital is at about 16, and this is a pretty cheap valuation for a REIT like STOR Capital. But again, that's also taking into account the fact that their top 10 customers aren't investment grade, and there is definitely some risk to that, and that reflects in their valuation. Now, I think if you're buying this company at a 14 to 15 price to FFO, I think you are getting a pretty good deal, and that would put the stock at around $26 to $28. And it's actually trading at around that price point right now. Now, as far as STOR Capital in my portfolio, I do have a pretty good position for my portfolio. I have 40 shares with a cost basis of above 24. And for STOR Capital, I actually purchased the stock before the whole pandemic situation, and my basis, believe it or not, was about 33, 35 on this stock. But then of course the whole pandemic hit, and instead of panic selling, since I really do believe in this stock and in this company, I went ahead and I continued to buy and average down my position, and I was able to average down from about 33, 35 to a 24 cost basis on this stock. And the only reason why I'm saying this is because if you own a stock and you truly believe in the business, it's going to be 10 times easier to average down if there's a downturn in the economy like we had with the pandemic. Now, taking a look at the growth rate for STOR Capital, they are projected to grow at about 6% for the next 5 years, which is pretty solid growth rate for STOR Capital. Moving on, we're going to be switching gears to a specialized REIT in American Tower. And American Tower basically focuses on renting out communication towers to customers like AT&T and Verizon. Now, when I first heard about this company, I had no idea what that meant, but these few slides actually helped me understand a little bit more of how this business model works. So basically, there's 4 different types of towers that American Tower could go ahead and rent out to businesses, again, like AT&T or Verizon, that need these towers for communication services. And when it comes to these towers, American Tower owns basically the structure of the tower and the land in which the tower is on. And then the tenants are responsible for the antenna equipment, for the base station in which they work from, and all the cables and wirings that goes into the tower. So basically, American Tower just rents out the space and the tower to these tenants, and then they collect a recurring revenue stream in terms of rent payments from their customers. And a quick note, the contracts that American Tower does are typically between 5 and 10 years, so that definitely brings some stability to their revenues. Now, when it comes to their adjusted funds from operations, you can definitely see the power of American Tower in their growth rate. Since 2009 all the way to 2019, in that 10-year growth period, they have grown their funds from operations by 15% and about 14% on a per share basis. So that's definitely showing strong growth by American Tower. And honestly, I don't think that growth rate is gonna slow down anytime soon. So moving on to dividends, they have been paying and growing their dividends for 8 consecutive years. And actually throughout those 8 consecutive years, they've grown their dividend each quarter throughout those 8 years. So they've actually grown their dividend for I think 32 straight quarters, quarter after quarter, increasing their dividend. And when I first learned about the business model of American Tower and the fact that they grow their dividend every single quarter, this is almost like a no-brainer REIT to own, at least in my opinion. Now, when it comes to their dividends, they are paying $4.56, and that gives them a yield just under 2%, which is actually higher than their 4-year dividend yield average. Now, when it comes to the funds from operations expected for American Tower, for the next 4 quarters, they're expected to do about $8.54. And with their payout in dividends of $4.56, they have an extremely healthy payout ratio of 53%, which is probably the reason why they're growing their dividend every single quarter. Now, when it comes to valuation, American Tower does trade at a pretty high premium of a 22 price to funds from operations. And if you want to get this stock at around a 20-21 price to funds from operations, we are looking at a steep discount at the 170 to 180 price point. Now, the stock is trading at around 240, so I don't see the stock dropping to that type of price point. But anyways, I do own a few shares of this company in my portfolio. I did pay a little bit of a premium for this company, but I think at the end of the day, if you're going to get a company like American Tower that has a strong growth rate ahead of it and they're growing their dividends every single quarter, man, I think I'm just gonna pay the premium just to own this stock, to be honest. And back to their growth rate, their earnings are projected to grow almost at 15% for the next 5 years, which is very similar to their past 5 years. I do think this company still has a lot of growth ahead of it. Switching gears one more time, we have Camden Property, and Camden Property is another REIT, but that focuses on residential properties and specifically on high-end property. And if we take a look at some of the pictures of the properties that they own, you can see that they're definitely in the higher end space. If you take a look at all these properties, they all look really nice and really high class. Now, when it comes to their tenants profile, the annual household income is at about $100,000. And you also have to keep in mind that the average number of occupants per apartment is 1.8, which I think is a pretty solid salary. It doesn't guarantee anything, but it is something to keep in mind. Now, when it comes to funds from operations, Camden Property did have a bit of a slowdown in 2016 through 2018, but I do think they are consistent and they'll continue to be consistent moving forward. So when it comes to dividends, they have been paying and growing their dividends for 10 consecutive years. And if you see this big spike up here in 2016, that was a special dividend that they paid, I believe, in the 3rd quarter of 2016. Now, here's the same chart just on a yearly basis, just so you can see how their dividend has slightly increased over the past 10 years. And again, in 2016, they had that special dividend. Now, when it comes to their dividend right now, they are paying $3.32 for a dividend yield of just under 4%, which is lower than their 4-year dividend yield average. But you also have to keep in mind that in 2016, that special dividend is affecting that 4-year dividend yield average. Now, when it comes to their funds from operations, the next 3 quarters are going to be down year over year, but they are expected to pick back up in the 2nd quarter of 2021. And for the next 4 quarters, they're projected to do $4.84. And with their dividend payout at $3.32, that gives them a healthy payout ratio of under 70%. Now, when it comes to valuation, their 5-year price to funds from operations is at about 18. And if you want to get this stock at a discount of a 16 to 17 multiple, I think we're looking at a price under 80. Now the stock is currently trading at around 90, and this is another stock that I do own in my portfolio and that I also purchased before the pandemic situation. And again, similar to STOR Capital, I purchased this stock at around 110, 105, and I was able to average down my position buying the dips and getting my basis now to about $92. Now taking a look at the earnings for Camden Properties, I'm not expecting much, but they are projected to do 3.5% over the next 5 years, which I think is pretty solid. Now last on the list, we have Realty Income Corp, the Dividend Hall of Famer, and Realty Income Corp is similar to STOR Capital in the fact that they rent out their properties to different businesses. But one key difference is that most of their customers are investment grade, unlike STOR Capital. As you can see here, we have the top 20 tenants for Realty Income Corp, and these top 20 tenants provide more than half of the annualized rental revenue for Realty Income Corp. And out of these 20 tenants, and 12 of them are investment grade. So more than half of their top 20 tenants are investment grade, which definitely minimizes the risk for Realty Income Corp and for their investors. And I think this data actually shows the importance of having investment grade tenants. As you can see here, April through July, the collection rate for Realty Income Corp was almost 90% at 88.9%, which was definitely higher than STOR Capital's collection, which was under 80% during this time. And as you can see now in August, their rent collections are over 90% at 93.5%. So that definitely shows you when you have higher quality tenants with better credit ratings, you're typically more likely than not going to get that rent payment from those tenants. Now, when it comes to dividends, again, this is a Dividend Hall of Famer, a dividend aristocrat. They've been paying and growing their dividends for 26 consecutive years. And a plus, they pay their dividend out monthly. Now, as far as their dividend right now, they are paying $2.81. And that gives them a dividend yield of over 4.5%, which is actually higher than their 4-year dividend yield average. Now, when it comes to their funds from operations, as you can see, they're actually projected to do fairly well for the next 4 quarters. They're projected to do about $3.40 in funds from operations. And with their payout ratio at $2.81, they do have a relatively high payout ratio at 82%, but you also have to take into account that they do have quality tenants that are almost guaranteed to pay their rent every single month. Now, when it comes to valuation, however, you are going to be paying a premium for those high quality tenants, as they have a 5-year average price to FFO of 20 on Realty Income, which is significantly higher than STOR Capital, which was at around 15 to 60. Now, if you want to get this stock under a 20 multiple, you're looking at paying at a $61 to $65 price point, and the stock is actually trading under 60 right now. I don't own Realty Income Corp in my portfolio just because I think STOR Capital has a little bit more upside. However, it does have a little bit more risk, but it does have a higher dividend yield. However, on the flip side, you are getting Realty Income Corp under $60 if you're buying the stock right now. And I do think that is a pretty good deal, and you should see very good returns over the next 10 years with Realty Income Corp, especially if you're buying at these prices. Now, when it comes to their earnings growth for the next 5 years, they are projected to grow at about 5.5%, which is definitely solid for Realty Income Corp. So that's basically it. Those are my top 4 real estate investment trust stocks in the stock market. We talked about STOR Capital, American Tower, Camden Properties, and Realty Income Corp. Hopefully the video was helpful, and thank you so much for watching.